Hello and welcome to another update video about Natgas. Natgas has dropped further. That was in line with the last update, in which we also still wanted to see another breakdown or another dip. We're going to take a look at that in a minute. But yeah, there are times when Natgas is really boring. At the moment, this is not such a time. Actually, Natgas is very interesting and very exciting. The downtrend is still active, so all we are doing at the moment, and what are we using Elliott wave for? We're using it for just tracking the trend and to understand when the trend is changing. And I'm watching this chart like a hawk because I'm waiting for the first indication that at least a larger corrective bounce is unfolding. At the moment, not yet, and I'm not going to confirm some kind of a low in place without seeing certain indicators, some evidence, okay, that things are turning around. We're now in this support area that I communicated yesterday. I think we might be heading towards that $1.61 level that I mentioned in the last update. But let's take a look at the structure first. I mean, again, this might change at some point because it's just extending, but that's not a problem. I think it's still a valid count, and I think it's still the count that works best. In this wave count, a larger degree fourth wave topped here on the 9th of January. We had a wave 1 down, a wave 2. Wave 3 is still unfolding. The length of this decline basically suggests that this is still our third wave. And then I'm still watching for another 4-5 pattern to complete the decline. What do we need to do in this video? In this video, we want to just first of all confirm that the trend is obviously still down. I want to make sure that everybody understands there is no way to say when this downtrend really will finish. I would never try to guess when a downtrend really finishes. There are ideal targets, yes, but without a break of micro resistance or at least a small impulse to the upside or anything, there's no way I would confirm a low in place. Okay, we don't want to prematurely do this. Obviously, even if we get evidence, sometimes it still breaks down. That's just probabilities in the in the works. Obviously there are no certainties in these markets. It's all about probabilities. However, by waiting for some evidence and by waiting for certain confirmations, we can at least minimize those disruptions. So for now, I think we just follow the trend. There isn't really anything significant to add or anything to change about this scenario. However, if we go to the, if we zoom in and take a look at the microstructure, first of all, we see that since yesterday's update, a new low was formed. I still think based on the structure, another 4-5 pattern is needed to complete the overall downtrend. And I have to adjust the resistance level. That's what we've done throughout the week already and end of last week. This is just the resistance for the fourth wave corrective rally, which I think is due at some point. And it's normal. We just have to adjust it to the latest price low because that's just how these retracements are calculated. They are basically a percentage, well, corrective rally basically. That distance is calculated based on the length of that third wave. And yeah, I think now the resistance is between $1.85 and $2.09. $2.09, if that level breaks, we have first strong confirmation that something more bullish is going on, and we might not see that last low. Now, if I zoom in further, go maybe even to the 30-minute chart. Yeah, so I mentioned to you yesterday, I think it was, that this was looking a bit like a bear flag. I mean, it extended into a larger bear flag, but that one more low is still due to this choppy structure, which was a 3-wave corrective structure rally. If you want to call it a rally, it wasn't really a rally, but that therefore one more low seemed likely. We have still a very similar structure down here, so it really seems like it might give us one more low, and we are going to take a look at the microstructure in a minute. $1.61 is the next Fibonacci support, and I think we could even add another microstructure here because it looks a little bit, I mean, I've run out, to be honest, of wave degrees, but just for the purpose here of this video, it looks a bit like an ending diagonal, yeah, in this wave 5 of 3. So basically we had a 1, a 2, a 3. This could be 4 really micro wave 4. And if I'm adding a resistance area here now, that at least gives us some guidance. So if we see a break above this initial resistance area, and we've already seen a very, very first reaction here, but resistance is between 168 and 172. So if we see a sustained break above 172, that would be first indication that a low is already in. Not the overall low, but basically we're now just driving on sight. So we have reached the downside target anyway. We're in a situation where a corrective rally could start at any point. I'm talking about this circle wave 4 rally. And it's literally just waiting now for first indication. I don't see any indication or evidence at this stage, so I'm still watching for, I would say, at least one more low here. We obviously don't need it anymore. It's really done what it needed to do to the downside. So I'd be happy if it goes up from here. But there's currently no evidence, and at the moment, price action would rather suggest one more low. That's really it for today. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in daily updates about the S&P 500, as well as regular updates about stocks, then check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.